One of the reasons I think shorts are giving up on shorting is that there is something that counters that move, right? We heard about it. We know about it. It's called buybacks. So when Apple or Google or Meta or Microsoft, or even from, those are the mega caps, or Nvidia or Uber or whatever, all these companies, their treasury has buyback programs, meaning they are in the market, open market, buying shares in the open market. Now, a lot of people think it's hocus pocus accounting. It helps their accounting. I kind of agree with that part. However, when shorts come in and press, who's on the other side? It's the company itself buying back their own shares in the open market. And that kind of balances this downside. It kind of softens the downside as far as I'm concerned. And the important thing to understand is that what does buybacks do? What do buybacks do? Okay, there is definitely benefits of buybacks to companies. And a couple of the major benefits are there's a significant rise in buybacks over the last few decades. We know that. There is no doubt about that. In fact, when the market starts accelerating going down, on the news ticker, you will see one after the other one, right? Increasing buyback shares, increasing buybacks, right? So what the companies are doing is they're creating immense amount of free cash flow. That's why Apple sits on 160 billion in cash in T-bills. That's why Meta sits in 100 billion in cash. Well, instead of doing other investments, what are they doing? They're buying their own shares back. Okay. And however, is it better for them? Because I guess they're not finding a proper investment for their cash hoard of hundreds of billions in dollars, right? Just in the top 7 companies, I think the cash holdings are close to $700 billion. And we're talking the Mag 7. Well, that's a lot of money sitting in T-bills, earning 3-4%, right? So they're seeing not worthy, but other than their own company stock to come in the open market, support the stock price and buy it back. So buybacks can help increase share prices. How? Well, more buyers than sellers, supply and demand, but especially on down days, it can put a floor on the price of the stock, right? And so the other thing that buybacks help is that a lot of executives have RSUs. RSUs are called restricted stock units. Those are like stock options. Well, by buying it back and pumping the stock, executives are benefiting from that. So obviously they're going to vote for buybacks. But I'm not against buybacks, but my downside on the buybacks is that they manipulate earnings. So what happens is that if a company has 100,000 shares, let's say, outstanding, and they're earning $1, right? That dollar is going to look a lot better if the company comes and buys the shares reduces the outstanding shares from 100,000 to 95,000. That dollar earnings now is going to be calculated on 95,000 versus 100,000 shares, right? So that dollar is going to look more. The dollar earnings are going to look better to Wall Street. So do they have an effect on manipulating earnings numbers? Yeah, I think so. But importantly, they put a put. There's like a put under the market when a stock is tanking, even on bad news days. Okay, they issue a lot of companies now. This S&P 500 is coming out with earnings this quarter. A lot of some companies are have bad earnings, such as Microsoft did a couple of days ago, right? Stock went down 30. I'll bet you anything Microsoft was in there buying their own shares. If it wasn't that, it probably would have gone down 50, right? But this is what companies do. They reduce the share count. They make their earnings look better. Executives benefit from it, obviously, because there is support. So their stock options are not underwater as well. And, does the little guy benefit? Yeah, if you own shares and they're buying the stock back and stock keeps going higher, it benefits you as well.